Hello and welcome back to another episode of Chat with Brandy, a weekly show where we talk personal and business finance, Canadian tax, and how to make money doing what you love. I am your host, tax professional and bookkeeper Brandy Miron, and this is episode 25. So today I am doing an episode on all about the seniors benefits and programs financial assistance information in Alberta. So by senior, I mean typically ages 65 plus, although this information will be really useful for anyone who's approaching that retirement age. So anyone who's like kind of approaching that 60 to 70 age range and their caregivers. So there's just a couple of caveats that I want to throw out before I start. So the first one is that this episode, I'm going to be throwing a whole lot of information at you. So I just want to clarify that this episode, along with every episode that I've ever done, will have show notes available, which will have all of the information, all of the website links, all of the phone numbers, everything that we discuss in there. And like I said, every episode that I've ever done has that. So if you want to head to booksbyBrandyMiron.com, you can find show notes for all the episodes there. So the one for this one will be up in the next couple of days. The second thing I want to mention is that as of the time of this recording, which is November 5th, 2019, all of this information is accurate. However, everything changes year to year, particularly when I'm giving you exact numbers. So for income thresholds, for example, or if I'm talking about benefit amounts, those change every year. Not a lot, but slightly, but they do change every year. Also, some of the programs that we'll be talking about, like their government-funded programs, those, of course, can be canceled anytime. For example, there was an energy efficiency program funded by the province of Alberta that was recently axed, so it could be canceled. But like I say, as of today, as of right now, all of this information that I've researched for you guys is accurate. All right, so let's just get into it. So I've kind of broken this session down into two parts. So the first part will apply to all seniors in Alberta. So that would be ages 65 plus. So it's regardless of income. So it doesn't matter how high or low your income is. These should apply to everybody. And then the second part of the video will go into low income benefits and programs. So that way, if you know that you or whoever you're watching this video for would not be eligible for those programs because their income is too high, you could just shut the video off then. All right, so let's get into it. So the very first one I want to talk about is Canada Pension Plan, or CPP. So of course I could probably do an entire video on this, but it is the main financial program for retired people in Canada. So of course I have to mention it. So I'm just going to kind of do a brief overview of it. And if you guys feel like more information is required on CPP or this in general, we can always do another video. And maybe I could even bring in an expert in pensions and that kind of thing. But the Canada Pension Plan is the Canadian Social Security system, okay? So it provides older and disabled citizens a basic level of lifetime income after the age of 65. Basically, CPP is mandatory. So if you are an employee in Canada, you absolutely have to pay into CPP. There is no opting out of it. And then when you come to retirement age, so typically age 65, but you can start as early as 60 or as late as 70, you apply to get it back. Now, most Canadian retirees will qualify for some level of CPP, but the amount varies based on how much you've contributed in your life. So, the maximum payout for CPP in 2019 is $1,154. But if you have not applied yet for CPP, I do not want you to count on the maximum, please, because the average CPP payout is $640 a month. So you can see that there's that's quite a variance. Okay, so the way that they calculate it is based on a number of years between ages 18 and 65 that you have contributed to CPP, so basically worked, and then of those years, how many years did you contribute the maximum? And the maximum varies year to year. There is, of course, a child rearing dropout provision, which just basically means that they'll allow you to have a little extra time off from contributing if you were raising children under 7. But essentially, in order to get the maximum, you would have had to contribute the maximum CPP per year for 39 years of your working life. So it's quite difficult to get the maximum, and like I say, the average Canadian does not get it. So the best way to find out how much CPP that you qualify for is to call Service Canada, and again, I will have the phone number in the show notes, and ask for a CPP statement of contributions. That will provide you down to the penny of what you will be able to get, okay? You need to know that CPP, no matter how much you get, is considered taxable income, but it cannot be clawed back based on how high your income is. So if you, have another work pension, or you have investment income that you're taking out on a yearly basis, it doesn't matter. Your CPP will still always come to you. It'll just be taxed based on what tax bracket you're in, okay? So let's talk a little bit about the early or deferred retirement pension that I mentioned before. So CPP rules allow seniors to take CPP as early as age 60. So what they say is for every month before your 65th birthday, they will reduce your rate by 0.5%. So for example, if you took CPP on your 60th birthday, that'd be a full 60 months before your 65th birthday, your CPP rate would be reduced by 30%, okay? Now, on the flip side, you can choose to defer your CPP until age 70 and take an increased rate of 0.5%. So, again, if you wanted to wait until you were 70, you'd get a 30% increase, okay? From a lifelong standpoint, so just looking at the basic math, if you live past age 77, you would take more from CPP if you waited until you were 65. Okay, if you do not live past 77, you would make more by taking the benefit early. So it's always a question of longevity. It's always a question of looking into the future, determining how long you're going to live, right? Some other considerations that you might think about when you're trying to decide is, okay, am I still going to be working past age 60? Because if you're still taking an employment income at age, whatever, 66, 67, you might want to consider holding off on the CPP so that you're not kind of getting taxed on both at the same time, right? So it's definitely a case-by-case basis. I always recommend reaching out to a tax professional or reaching out to like an investment professional, someone that can help you plan that out, okay? Application, I always recommend you're allowed to start applying 11 months before you want your CPP to start. And I always recommend minimum 6 months because it takes them a while to get it done. Okay. And it also, the application process is not the easiest. So you just might want to give yourself a little bit of time. Okay. So, and again, I will have the links for the application and the phone numbers in the show notes. So let's move on to the next benefit, which is OAS. So old age security. So this one is actually government funded. You don't pay into it directly as a taxpayer. The OAS pension is a monthly payment available to seniors age 65 and older. So the eligibility of this is, again, 65 or older, you must be a Canadian citizen or a legal resident, and you must have resided in Canada for at least 10 years since the age of 18. People living outside of Canada can actually get it as well, but you have to have resided in Canada for at least 20 years, okay? Generally, if you have lived in Canada for at least 40 years since the age of 18, you will receive the maximum benefit, which as of this time is $601 per month. OAS, again, is considered taxable income, but OAS can be clawed back based on income. So basically, they give it to you, and then they say, if your income is higher than this amount, when you file your tax return, we're going to take that back. So right now, the annual income, if it creeps over $77,510, they're going to start taking your CPP back. Once your income level reaches $125,696, your OAS, I'm sorry, I should have said OAS will be clawed back, not CPP. Once your income level reaches that $125,696, the OAS will be completely clawed back. So again, so going back to that early retirement, you cannot take OAS early. 65 is the minimum age you can take it, but you can defer it to age 70, which would be wise if you were working still past age 65. So if you're 68, 69, you're still working, I would recommend deferring your OAS to the last possible minute, which would be 70, in order to not get it clawed back, unless of course you're below the income thresholds regardless. Okay. Also with OAS, if you do choose to defer it, it will result in a 0.6% benefit increase. So that would be a maximum of 36%. Okay. Application information will be in the show notes. The next thing I want to move on to, and again, this is available to all seniors. It doesn't matter income level, but there are some key tax credits that you should qualify for automatically. So if you are using a tax software program or a tax professional, these items should come automatically. The only way that you would actually have to think about them is if you were doing a tax return by hand. So the first one is an age amount. So if you're 65 or older, you would qualify for this year at $7,333 tax credit. Once your income passes more than $37,000 though, that tax credit starts to drop a little bit until $86,000, and then it disappears completely. The next tax credit is pension amount. So if you report any sort of eligible pension income, so that would be a RIF, that would be CPP, that would be OAS, or obviously a work pension, you would be able to claim a tax credit. So that's $2,000, okay? Then the third one is disability tax credit, which not everybody is eligible for. We're going to kind of go into that a little bit, but a lot of seniors are eligible for it. So I did want to definitely include this tax credit in here. Okay, so the next thing I want to talk about is those tax credits that we just mentioned. You can actually share them with your spouse. So tax credits are only beneficial if you actually have tax to pay, okay? So let's say you have a married couple. The wife is eligible for the age amount and the pension amount because she gets CPP, a little bit of CPP, but she doesn't actually need that tax credit because she doesn't owe tax. Her husband, or her spouse in this case, can actually transfer that credit to him in order to use against his. So that's a nice thing that you can do to lower your tax burden, okay? The other thing that seniors get is if you do have pension income, and unfortunately for this, it is not including CPP, okay? So it would be work pension or a RIF. You would be able to split their pension income and therefore pay a lower rate of tax. So again, we're looking at a married couple. Let's say wife has a work pension, and so she's in the second tax bracket. Let's say that. Then we have husband who just has CPP and OAS, and he's in the first tax bracket. The wife would be able to split up to half of her work pension income off onto his tax return in order to equal out their tax brackets and save money, okay? So that's a really nice thing because most taxpayers have no access to splitting income anymore. So that is nice that retired seniors still have that availability to them. Other common tax deductions. So the retired people, you know, there's not a whole lot of the family or employment related deductions anymore, but they may still benefit from deductions such as medical. So I just did this presentation earlier this morning actually for a group of seniors, really lovely people. And a big one that when we talked about the medical expenses that a lot of them in the room didn't know is that you can claim premiums that you're paying for insurance for, like Blue Cross, for example. You can claim those premiums as a medical expense. Okay, the next one would be carrying charges. So by this I mean fees that you're paying to your investment banker, not safety deposit boxes, but if you are paying actual investment fees, or let's say you borrowed money, like you've taken a loan, an interest-bearing loan to invest with, you can use the interest on that loan as a tax deduction, so that's nice. The next one is charitable donations, and then home accessibility expenses, which we'll talk about a little bit because that one goes with the disability tax credit. Okay, let's talk about disability tax credit. So again, age doesn't really matter for this one. So this could be interesting or useful to a lot of different people, but I like to include it in my seniors presentations because a lot of seniors do have disabilities. So a lot of them are eligible for this. So let's talk about the definition of disabled to CRA. So a person with severe and prolonged impairment in physical or mental functions may be eligible for the disability tax credit. So this year, the tax credit is $8,235. Once you are eligible for disability tax credit, so let's say today is the very first time you're hearing about this, so you go and apply for it, you can actually get your tax returns adjusted for 10 years back. So this could equal tens of thousands of dollars back in your pocket, okay? Who is eligible? So for you to be eligible for the disability tax credit, a medical practitioner, so that's a doctor or a registered nurse, must certify that you have a severe and prolonged impairment in physical or mental functions, okay? The medical practitioner also needs to describe the effects of the person's impairment. So most GPs, most general practitioners, family doctors, should have some understanding of this form. It's called a T2201. I will have a link to it in the show notes. They should have a basic understanding of the form and what CRA is kind of asking and looking for on that form. There is an eligibility questionnaire online that you can take yourself before going to the doctor. And it's 5 questions, and it just asks about your disability and how it affects your life. And they're yes or no questions. And basically at the end of it, it tells you, yes, you might be a candidate for this. So if it does say that, you basically it's like a 5-page form. You fill out half of 1 page and the doctor fills out everything else. Then you take a copy of it, you send it into Canada Revenue Agency. They take 4 to 6 months to respond to you. But if they do and you're approved for it, you will get a tax credit. Also, if you don't need the tax credit, so let's say your income has been low enough to not need a tax credit, because again, tax credits can only be applied to tax payable. Your spouse you can share it with your spouse, or if you have a caregiver that you live with, you can share it with them as well. Okay, so we talked about the application form. If you are approved for disability tax credit, you could also qualify for several other benefits. So the one is home accessibility expenses. So people that are eligible for disability tax credit who are over 65, who own their own home, may claim a deduction of up to $10,000 on a qualifying renovation to allow the individual to gain access to or be mobile or functional within the dwelling. So if someone needs to put in a ramp or someone needs to put in a bathtub insert, if they qualify for disability tax credit and they're over 65, they keep that receipt, they can use that as a deduction on their tax return, which is awesome. The next one is disability supports deduction. So again, eligible individuals who pay for certain medical expenses in order to go to work or to school or to do research for which they receive a grant may be eligible for deductions. So think here, Braille devices, note-taking services like closed captioning services, voice over text, that kind of thing, like certain types of software or certain types of equipment that you would only need because you have this disability and you're buying it in order to make income or go to school, it would be a deduction for you. And then the last one, which is really big, is additional medical expenses. So for this one, it basically means that individuals who are eligible for disability tax credit could claim certain medical expenses that others may not. So a big one is attendant care. So that's either if you have home care coming to you or you are living in a nursing home of some kind. If you have disability tax credit, you can choose to claim the rent that you're paying at that lodge, the accommodation, the laundry services, all those kinds of things, which can add up to be a lot of money. Okay. The next one I want to talk about, and this is the last program that is not income dependent, is the Seniors Property Tax Deferral Program. So the Seniors Property Tax Deferral Program allows eligible senior homeowners to defer all or part of their property taxes through a low interest home equity loan. So basically this is a loan program. They essentially, like Government of Alberta will pay your property taxes directly for you, and then you can repay the loan with interest when you sell the house. So basically it's meant to keep seniors in their home for longer. The whole idea behind it is you have enough equity in your house to pay for these property taxes, but you don't want to pay for it until the actual home is sold. That this program is perfect for you. So to be eligible, again, age 65 or older, you have to be an Alberta resident for at least 3 months, own a residential property in Alberta, and have a minimum of 25% equity in your home. Okay, again, there will be a lot more information on this in the show notes, but as of right now, let's see if I have the interest rate right now. I believe it's 3.65%. It's just simple interest, so it's not compounded. Yeah, it does. I don't have the interest rate right now, but I believe it's 3.65% as of today, but that would change every quarter. Okay, I'll have application information in the show notes as well. So from here on out, for the rest of the video, we're going to be talking about benefits and programs that relate to low-income seniors only. So for all of these, that is for a couple under $45,000 or for a single person under $28,000. Okay, so if you're saying goodbye to me now, goodbye. So moving on, so the first one that I want to talk about, and I have seen many times people not knowing about this when they could have qualified for it, is the Alberta Seniors Benefit Program. So this is provincial, obviously. The Alberta Seniors Benefit Program is a monthly benefit, non-taxable, paid to seniors with an annual income of $28,150 or less, or a senior couple with a combined annual income of $45,720 or less. So again, that's just this year. That will change slightly next year. They are also, the other qualifier is that the senior must be on OAS. So you must have already applied for and gotten your old age security pension. So the benefit is determined by the type of accommodation you live in. So whether you're a homeowner or a renter, or you're living in a lodge, or you're living with family, your marital status, your income, and then if you're receiving OAS. So the maximum benefit available right now, so for a single senior homeowner, would be $3,431 per year, or for a senior couple who is a homeowner, $5,146 per year. Okay, so that's homeowner, renter, or lodge resident, excuse me. The other residence categories are living with family, like living rent-free somewhere, and those benefits are a little bit lower, but I'll have those in the show notes as well. Along with seniors benefit, Alberta Seniors Benefit, there is the supplementary accommodation benefit. So that supports eligible seniors who reside in a designated supportive living or long-term, I just can't talk right now, or long-term care facility with monthly accommodation charges. So obviously any kind of lodge that would charge you rent. The amount received is determined by, again, your personal income. So they're always, by the way, they're always going off your last year's tax return for these, okay? And then they kind of check on it again every year to make sure that you're still eligible. The maximum monthly accommodation charge is set by Alberta Health. The monthly disposable income amount of at least $322. So they look at a bunch of math, but essentially it's an extra supplement for people who live in those type of accommodations. So just so you know, if you are applying for Alberta Senior Benefit and you are living in a lodge of some kind, there is a supplement for you as well. Also that goes along with that program is the special needs assistance. So this provides a lump sum payment to eligible seniors with low income, which we already talked about those thresholds, towards the cost of appliances and specific health and personal supports. So the maximum, so again, these are grants. So they're just giving you money. You don't have to repay it. It's in order to, keep living at home and have a good quality of life, which I love. The maximum assistance available for this program right now is $5,100 per year. And then, of course, they inflate per year. So who is eligible? A single senior or a senior couple total annual income. Again, it's so there's two tiers of the types of things that they will fund. So the primary tier is things like appliances. The secondary tier is like, I believe there's like mattresses on there, television, that kind of thing. So the primary and secondary tier is if your income is very low. So under $23,000 for a single person, under $37,000 for a couple. And then if you have a slightly higher income than that, so if you're still under $28,000 but above $23,000, you would just qualify for primary. Or for a senior couple under $45,000 but over $37,000, you would just qualify for the primary items. And again, I will link all of this information online. So Alberta Seniors Benefit kind of covers the last three things we talked about. And I highly, highly encourage you, if you know that you are low income or you know that the person that you're watching this video for is low income, to apply for that, because it's available and it's just one of those things that's not automatically applied for. And every time I do a tax return for a senior, I always look at their income bracket to see if they would qualify for these things, but of course not everybody does. So I just want to make sure you guys are taken care of, and you know, if the government is offering these programs, that we're taking advantage of them. Okay, so the next thing goes with, this is a federal program. It's called Guaranteed Income Supplement and the Allowance. So this goes with OAS. So if you are a recipient of old age security and your total income is below a certain threshold, you could qualify for a supplement from the federal government. And this supplement is tax-free, which is nice. So to qualify for Guaranteed Income Supplement, you must be OAS pension, which we talked about, which would mean that you're over 65. And you can get, as a single person, if your income is under $18,600, so it has to be very low, your monthly benefit would be $916. So you can see what a huge difference that would make to somebody's life. If you are in a common law or a married status, you and your partner receives the full OAS pension. So both you and your partner get the OAS pension. You could get $551. Your maximum income is $24,000. If you're in a marriage and your spouse or partner does not receive an OAS pension for whatever reason, your maximum income can be much higher. So $44,592, and you would get $916. And then if your spouse is under the age of 65, meaning that they can't get OAS, there is something called, there is something called the allowance. So the allowance is for people between 60 and 64 with an older spouse. So they have a spouse who's receiving OAS and is eligible for this guaranteed income supplement that we just talked about because of your income, but you're between the ages of 60 and 64, you could get the allowance. So the allowance for a married person could be $1,165 per year, and your maximum combined income would be $34,416. If you are single, so if you would, in this case, you would have to be a widow, and your or a widower, and your deceased spouse would have had to been eligible for OAS before they passed away, then you can get $1,388 per month with, as long as your income is below $25,000. So this federal one, your income has to be very, very low, but it is something that I like to bring up because it's not always automatically applied for. Sometimes it is, and honestly, in my experience, there's no rhyme or reason as to why some people are automatically enrolled and some people are not, but I can tell you that I have personally enrolled people in this, you know, more than a handful of times. And so that tells me right there that it's not automatic for everybody. So this is just something that I want you to know about. And again, more links, more information in the show notes. Two more programs I want to talk about. And both these programs are Alberta funded, so they're both provincial. And like I kind of alluded to at the beginning of this video, there was a third one, and it wasn't necessarily geared towards seniors, but it was an energy efficient energy efficiency rebate program for like solar panels and things like that that recently got canceled. So I'm not sure what that means for these two programs that I'm about to talk to. I hope it means nothing, but at the time of this recording, these programs are still in effect. And I would just say, do a quick Google search. If you're watching this or reading these show notes at a later date, or especially a later year than 2019, I would definitely be making sure that these are still in effect. Okay, so the first one is called the Senior Home Adaptation and Repairs Program, otherwise known as SHARP. So the SHARP program allows seniors to use their home equity to remain in their homes and maintain their independence. So there's two tiers to this program. So the first tier is a loan program. So it's a lot like the property tax deferral program where they're using equity in your home. So it's low interest home equity loans, and it covers a range of home adaptations and renovations to help seniors stay in their home longer. So you must provide a written cost estimate or receipts for all the project funds being applied for. You can apply for retroactive funding. So this part is awesome. So if you're watching this and going, oh my gosh, I just did a huge reno or a small reno, whatever, 6 months ago, anywhere up to 12 months ago, and you still have receipts, you can still apply for funding for this and get a little bit of cash flow back into your life, okay? So basically how it works is the loan, they will give you a loan of up to $40,000. You have to have an annual combined income of $75,000 or less, but more than 45. So between $45,000 and $75,000, your income must fall into. You have to be 65 or older. You have to have 25% equity in your home after the loan amount is applied. And you must be an Alberta resident and have lived here for 3 months. Okay, so that's the loan portion of it. So again, it's kind of like, I may not have the money to put the repairs that I need to stay in this house now. So they're trying to prevent you from having to move into a lodge or something by doing the repairs, keeping you in there for another 5 or 10 years. And then when you sell the home, you can repay that loan. Okay. Now, if your income is below $45,000, the SHARP program offers grants. So these are non-repayable, and you may be eligible for it. So the maximum assistance available is $5,000 per year for the grants, or $15,000 for a lifetime. So again, if you've already done something to your home in the last 12 months, and your income is below that $45,000, you can retroactively apply and perhaps get a grant back to pay you back for that. So I hope that some of you can get help from that. Have lots of information on application in the show notes. The last one I want to talk about, and it's very similar to SHARP, is called the Residential Access Modification Program, otherwise known as RAMP. This is actually not just available to seniors. This is available to anybody with mobility challenges. And these are grants. So you can get up to $7,500 per person per year, or up to $15,000 per person in a 10-year span. So to be eligible, you have to have a single person with a gross household income of $36,900 or less, or a couple with a gross income of $46,500 or less. If you have children, that amount can be increased, or if it's a child that needs the wheelchair, that is in the wheelchair, that amount can be increased as well. You have to be living with a progressive neurodegenerative, oh my goodness, disease, including MS, muscular dystrophy, ALS, COPD, Parkinson's, Alzheimer's, spina bifida, spinal cord injuries, or non-recovering stroke. An Albertan of any age using a wheelchair, or a 65 plus senior who uses a 4-wheel walker on an ongoing basis could qualify for this. So if you're over 65, you don't need to be in a wheelchair. If you're under 65, you do. Okay. You can be a homeowner or a tenant or living with family, as long as you have obviously permission from the owner. You have to be a Canadian and Alberta resident, and you have to be expected to live in the home for the next 10 consecutive years. The modifications must enable you to enter and move within your own living space. They usually should be permanent, and they have to be made to properties in Alberta. Okay, so again, application information will be online. In preparation for this episode, I also spoke with a general contracting company here in Edmonton. Actually, they're in St. Albert, but they service Edmonton and all the surrounding area. They have a lot of experience with both of these programs. They've dealt with them a lot, and they have a lot of good information on walking you through the application process, what qualifies and what doesn't, that kind of thing. So if you're interested in getting a quote from them or just more information or what have you, I will give you the contact information in the show notes, but it is Caruana Interiors. Otherwise, you can call the government programs directly at the numbers that I'll provide to you in the show notes as well. So that wraps up this week's episode. I hope that I gave you some good information that you can either use yourself or pass along to a senior that you love. Again, as of the time of this recording, November 5th, 2019, everything in this video is appropriate and accurate, but I will try to update show notes as I see updates happen to these programs, but just know that, yeah, the amounts that I've mentioned do change every year. So I hope you found that helpful and informative, and we will see you next week.